Yeah, the only one that did jump was Reddit itself, which this
Yeah.
time is a publicly traded company and therefore can be a meme stock, I guess. And it has IPO'd very well. It recently cut a couple of deals with AI companies to, give them some of the learning based on Reddit posts, and that's going to bring in a bunch of money. And so Reddit has found a couple of ways to make money now, advertising and selling your data to AI. So it's a little less of a meme stock. It's just got that sort of new, fresh
Yeah.
excitement to it.
Hi, Scott. How are you?
I'm well, thank you. Very glad that once again I avoided the siren songs of the meme stocks.
Yes, I have that on our list of topics today. Okay, well, the first thing is we had sort of a landmark this week. I mean, the Dow Jones Industrials broke 40,000 for the first time. I remember when that guy wrote that book about Dow 36,000 or something years ago, and everybody laughed. And when the stock market fell, everyone, poo-pooed that book and said, it was always unrealistic and the guy was a dreamer. Well, here we are. Uh, you got to be impressed. I mean, the market is just going crazy. And all on the expectation. They really believe. I mean, it seems to me that all the big traders out there, every time they get the slightest hint of good news, that inflation's down or employment's slightly down, it's a chance. It offers a chance that the Fed is going to come in and finally cut interest rates. And when they do that, the market's going to take off. And they're really speculating on that future.
I think that's part of it. I think good news flies in a strong economy, and we've really got an overall strong economy. But we've seen in down times when the stock market has been low, even when things seem to be going its way. I think right now there's just so much going for this economy, especially if you're an investor. And I mean, think about it. In the year 2020, so 4 years ago, 4.5 years ago, the stock market was half of what it's at now. Remember, because it slumped in the early days of the pandemic, it has since then, since those lows, doubled in about 4.5 years. That's incredible.
Yeah, and you look at the chart of Wednesday when this happened. It started out at about 38,850, and then boom. I mean, this is a psychological barrier. I mean, hitting these round numbers, it takes a lot for the market to finally get up the courage and go for it. And it went for it. Now it's fallen back a little bit in the last couple of days, but they've set the new high water mark. Is this over enthusiasm, you think? I mean, some people are saying the market's getting pretty heated up and all the stocks are looking pretty good, but maybe they're overexcited right now.
I think investors are overexcited, especially about some of the tech stocks. I mean, AI is red hot, and people are not only continuing to pile into the AI stocks we've seen, Microsoft, Nvidia, et cetera. They're trying to find sort of ancillary AI stocks to pour money into, potential AI stocks to pour money into. And so this feels a little frothy in that way. And that
Oh,
is certainly,
there's the scary word, frothy.
yeah. So I agree with you in that things are a little ahead of itself. But again, getting back to my initial thesis, we're in an overall strong economy. People are working, salaries are higher, and there is this hope of an interest rate cut. And so, yeah, everything's expensive out there, as per a strong economy that's really rolling. And that makes stocks expensive, and people still want a place to put that money. We're still, I believe, dealing with money from the pandemic stimulus, and then we've got the wage growth stimulus, and all this stuff is pouring into the market, and that's why we're seeing record highs.
Well, I'm looking at some of the numbers of the 30 companies on the Dow. Number one was, well, American Express, but then Amazon were among the biggest percentage gainers this year, up 29% and 22% for Amazon. Uh, and then you've got a lot of tech companies. And the only one that's trailing everything in tech, besides Boeing, which you can understand why, Intel. Intel in this surging market, especially for AI, is down 37% since the start of the year, making it the worst performer so far in 2024. What's going on? I mean, it seemed
Not
kind of like
much.
Intel had big plans and was optimistic, and it was getting giant sums of money bags from the federal government to build new fabs. What's wrong?
I mean, nothing's going on. That's the problem. They've lost their relevance. They've lost any heat. They're not in the AI conversation right now. And so, where all these chip companies are either focused on mobile or AI or a little bit of both, Intel is really just sort of out there as it's sort of the smokestack company version of
Yeah.
the chip industry right now. And that's just not sexy. People are not looking at Intel as a growth company anymore, or at least not for a little while.
Are you hearing any inside information about Intel getting into AI? Do they have an initiative? Do they have a big project in Tel Aviv or something at their research facility? I mean, is there anything there of interest?
I hear rumors that they're getting involved in AI, but they're just rumors. And in a time when everybody else seems to be jumping over each other to point out that they are involved in the AI movement, especially chip companies. What a time for chip companies. And Intel is just not participating.
It's very strange.
Yeah.
And you would think that they would put some kind of stake in the field, saying, "Yeah, we're working on a major project, and we're the guys that gave you the microprocessor, and we're going to rule AI. Just give us a little bit of time." I don't hear anything like that.
No, I mean, they're just not, they're not at the forefront. They're not even in the middle of the pack. They've just, they're just being ignored right now. And that's in a growth time, a time of excitement and growth. They're just off on the sidelines and people are just not interested. And they really haven't put anything out that makes it seem like they're in the AI game yet. And I think people, I would say they're reacting to that, but what's happening is that there's not reaction to that. And
Yeah.
therefore they're just not in the conversation.
Okay, let's talk about meme stocks. If there's two things that over the years I sense that you are always wary of, one, of course, is uh, you know, cyber currency and all of that. But the other one is meme stocks. Now, years ago, what was it, 2 years ago, 3 years ago, you and I found ourselves covering GameStop, and these basement speculators, putting a bunch of dough into it and making a bunch of money back. Well, the guy who did that, Keith Gill, who was the guy behind Roaring Kitty, which set off the whole GameStop bubble, speculative bubble, has reappeared after 3 years. If it's really him. I mean, there's a lot of speculation out there on places like Reddit that this is somebody else because he apparently sold Roaring Kitty way back when. So who is this guy? He claims to be Gil, and he's having the same effect. I mean, GameStop, just like last time, it's who is it? It's GameStop and Theater Company, which
AMC.
AMC, that's right. He came out and did the same thing again, and GameStop stock, which had been falling literally for years now since the last bubble, jumped 100% one day, making a lot of kids able to buy more weed. So what do you think? I mean, how can you do this again? I mean, he did it in 2020 and 2021. And now he's doing it again. And he's given up, I guess he's laid off, blowing up Lamborghinis and gone back to trying to lead major market speculations. But I mean, is any of this real? I mean, up 118%. It hit an intraday high of $38.20 when it had been down to like $10. What do you think of all this? Is this another little game in the system again? I know people are shorting stock got killed once again, which doesn't break my heart. But nevertheless, what do you think?
I mean, it's this very same pattern as last time with, oddly enough, the very same stocks. it's not like GameStop after the first round of meme games in which it, went up tremendously, changed as a business. It's still a money-losing business that's, destined for the right. Same with AMC, it's losing money. And those two stocks, once again, on the possibility that this guy comes back, GameStop doubled and then it doubled. It was up to about 70. By later in the week, it was down to about 30. So yeah, the shorts got killed and then the longs got killed. And that's what happens with this crazy rampant speculation. And once again, we are willing as a society to use both Reddit and the stock market in the same sentence. And that just is a very, very bad combination.
Yeah. Do you think the players last time are the same ones this time, including the basement investors? Did they recognize that the game was on again and get in and get out quick enough?
It's a great question because you'd think that those who maybe made a little bit of money or those who lost a lot of money the first time around would be the wiser. And when they see this happening, say, whoa, okay, I got mine, or at least, I still have my house or I still have my car. I'm not going to get caught up in this again. So maybe it's the people who felt that they missed out the first time around. And this is a crazy roller coaster ride if you have that kind of mad money to put into the market. But we saw the same pattern. It just took longer last time. And granted, as you and I speak right now, this whole, roaring kitty comeback is only about a week old. So who knows how long this will last. But there was a huge ramp up last time and then a big crash. And this sort of ramp up and crash happened all within a week this time. Will it continue to ride up and down? Maybe so, but not on any fundamentals whatsoever.
Didn't you expect it would be other stocks that would be targeted? I mean, the moment GameStop stock started climbing, everybody I knew said, "Oh, it's the same game again. They're trying the same scam." Wouldn't you try a different one?
I guess so, although things are different this time, even as they're the same, because it was Roaring Kitty who said, "Hey, GameStop, this is the one I like." And AMC went along for the ride, and to an extent, some other ones like Nokia, briefly. This time, just on the hint of him coming back without naming any stocks, for some reason, these speculative investors went for the same spots. And like I said earlier, those businesses haven't changed fundamentally. All they are meme stocks. People went right back to the same thing, which, fool me twice, right? I mean, come on, guys. They didn't even go for new ones. Yeah, the only one that did jump was Reddit itself, which this time is a publicly traded company and therefore can be a meme stock, I guess. And it has IPO'd very well. It recently cut a couple of deals with AI companies to, give them some of the learning based on Reddit posts, and that's going to bring in a bunch of money. And so Reddit has found a couple of ways to make money now, advertising and selling your data to AI. So it's a little less of a meme stock. It's just got that sort of new, fresh excitement to it.
Yeah, I got to say, Reddit is the most surprising stock of this year so far to me. You wouldn't have ever thought there'd be any demand for that company, but here we are.
Yeah.
Okay. We're talking about losing money. Now let's talk about making tons of money. NVIDIA announces its quarterly earnings next Wednesday, I believe. And the expectation is, the consensus is it's going to be 24.51 billion for the first quarter, rising to 26.52 billion in the second quarter. Shares are up over 80% the year to date. Pretty impressive numbers. I mean, that's as good as you're going to get. What do you think? I mean, can they keep this up? I mean, I'm seeing analysts predicting it's going to jump not just to 1,000 now, but to 1,150 in the near future. And that's up another 28% on an impossible amount of growth in the last few months. Can NVIDIA keep this up?
It's hard to say. Remember, people were asking that question 3 months ago ahead of that big earning report, and everyone was saying the future of civilization depends on NVIDIA meeting its numbers, and it beat its numbers somehow. And even since then, I mean, one thing that happened early this week was the really impressive OpenAI demo. of GPT-4. And that was some jaw-dropping stuff. And remember, at the end, the executives of OpenAI even gave a shout out to Jensen Huang and NVIDIA saying, hey, we really owe you a lot. And since then, the stock has continued to go up. So I don't know if that translates to the bottom line. I don't know how many of those chipsets NVIDIA sold this quarter versus last quarter, but you've got to believe as the appetite for AI is so insatiable among Silicon Valley tech companies, and NVIDIA continues to be the place to go to get those chips, I guess it can keep up this growth for at least a while. I know there are other chip companies trying to catch up, but I don't think they're there yet. I think NVIDIA is still,
yeah,
I think NVIDIA is both the place to go if you want those chips to form the foundation of your AI growth, and also the place to go, it seems, for investors who want to buy into the AI hype.
Now, I'm hearing some rumors. One of them I know pretty strongly the case is that NVIDIA's kind of developing custom chips or their existing chips with custom software for autonomous driving and for robotics. Robotics is the one I can't quite chase down, but I'm hearing it out there right now. Is that true, do you think? Have you come across that at all?
Well, they're both areas that are also going towards AI for their movements and their sort of how the machines think and work and all that. And yeah, and that's why Tesla is considered an AI play in some circles, is because of the autonomous driving, and other companies as well. So that would make sense that robotics, autonomous driving, as well as these translation devices and your AI friends, they're all of a piece right now, and they all need those super powerful chips in order to perform well. And even given just the last few months worth of demos, the jump that AI is able to do is actually quite impressive. And so I imagine the computing power that these companies are able to draw is also growing.
They gave out a big salary to their founder and CEO this week, and they also announced they're buying a $250 million property near their headquarters in Santa Clara. So it looks like they've got big plans, and they've got the money to do it. They're also now a $2.3 trillion company, according to their stock. These guys are a juggernaut. As we talked about before, I don't see them slowing down. I mean, they're kind of doubling down on what they're trying to do. Can they get enough people in Silicon Valley right now?
One thing that you do hear about NVIDIA is they're losing some people simply because they're too rich to keep working.
Yeah, we saw that when Microsoft went public. They lost half of their founding employees because they called in rich, went home.
Right, and that's happening with NVIDIA. It's understandable. It's a problem that a lot of companies face when they not only go public, but go public and then get super, super successful with their valuation. I mean, NVIDIA has just grown by leaps and bounds. And so they're recruiting, but they're also losing people. And then, when a company gets that big and successful, you also have trouble recruiting people when there are smaller, nimbler companies that can offer stock options with this stuff. Imagine trying to recruit against an Anthropic or an OpenAI, any of these companies that are not yet public. That's got to be tough because the promise of riches is being offered there.
I wrote a book on a company that had this, where you're sitting there and you're getting a salary, and the guy next to you and the gal over here on this side are doing exactly your same job, and they're getting a salary, but they're also worth $20 million in stock. It's kind of hard to hire you because you're not going to get any stock. I mean, that's why some of these companies create these sort of ersatz shares, options, to try to figure out how to reward people so you get some kind of equivalence among the employees in the company.
Yeah, it's the rise of the RSU. It's not free IPO stock for a company like NVIDIA anymore, obviously, or even maybe options, but RSUs. And I mean, look, if you took those even a couple of years ago when the company was already big and strong, you've really, really got a lot of money. But you have to guess. You have to sort of have faith that there is more to come, and maybe there is. Who knows?
Yeah, and when you're going to work in the morning and you're tired, and it's Monday morning, and you walk by the brochures you got about chateaus for sale in France, and you're going to work that day and you don't want to go, or you're sitting there and you know how much you're worth, you're worth tens of millions of dollars. Are you going to take much shit from your boss?
I don't know what you're talking about because for some reason on my way to work, no one hands me those brochures. I can't figure it out.
Okay, the EU regulators have opened an investigation into Meta for the potentially addictive effects of Facebook and Instagram on children. And in theory, they could be fined up to 6% of their global revenue, which is $135 billion, if the EU regulators decide that those two sites are rotting kids' brains. I know the EU, the EU loves to hate successful American companies, but do you think they have standing on this? I mean, you think there's grounds for a
There
fine
is.
to be tens of billions of dollars?
Well, yeah, why not? I mean, the EU, their rules are a little bit different, but we have essentially been trying that same case here in America for a long time.
Yeah.
And I just think our end game is a little different. Our rules are a little bit different. So in the EU, they do bring out the knives on big tech companies, especially social media companies, even sharper than we do. We'll have these hearings and sort of tut the companies, and sometimes even publicly shame them in front of actual, victims, like they did with Facebook or with Meta. But in the EU, they bring out the knives, and so I don't know where this goes, but anything can happen there because in the EU they just don't mind. They'll shut them down and they'll move on.
Yeah, that's kind of what I figured. Okay. Two MIT educated, we're going to go back to the froth land. Two MIT educated brothers allegedly stole 25 million in crypto. How long do you think it took?
I think 17 seconds, right?
12.
12 seconds.
If crypto isn't scary enough, the idea that somebody could just steal that much money. Apparently what they did was I'm reading it right here. They figured out a way to tap right into orders and grab some and walk away. $25 million. There's no reason they couldn't have taken 25 billion. How is this ever going to be secure? How is it secure enough that countries can even consider making this their currency?
Right. That's an impossible question to answer because even as security has gotten better, it still hasn't gotten ahead of the thieves. The thieves always seem to find a way. And so that's one of the two scariest things about crypto is one, it's vulnerable. All right, money is vulnerable too. But unlike money that you have in a bank, crypto is not backed up by anything. And so that's $25 million that, if it's stolen, it's gone. And you can't back that up with an FDIC type of thing. And yet people still love crypto. But that is something that has happened enough, these thefts, where people know by now, or they really should know, that that's one of the big risks they take when they get into this stuff.
The famous line by Willie Sutton, the legendary bank robber, when asked why he robbed banks, he said, because that's where they keep the money.
Right.
In this world, the money is kept in the ether, and you don't have to be Willie and go in and face security guards and give a stick-up note to the teller. You just pull it down from your den. I don't understand how this can function over time. If it keeps being a target like that, and you can just get two smart brothers who can, loot the bank without having to break into the vault, it's hard to imagine how this can ever become a secure operation, a currency.
Right. As much so as you could say that about anything. And yet, through the years, as the thieves have still stayed ahead of security, we have put our banking information on our phones. We have put all this private information on our laptops, and it's vulnerable. I mean, all this stuff is vulnerable. And yet, not only do we put things on these devices, but we put, Amazon Echoes in our homes, and they listen to us all the time. We as a society love these gadgets.
Dear, what's our Visa number?
Right.
Yeah.
Right. And we love the convenience. I get it. I'm one who does some of those things. But you just need to have this in the back of your mind that if you lose something, or if you're willing to put something online, you have to imagine life without it. If you have $1 million in crypto, boy, I don't know. Like I said earlier, I'm not that rich. I can't imagine life without that. So that's enough to keep me away and wary about it. But yeah, I don't see how this goes away, because security threats never go away.
Yeah,
right?
well, Willie Sutton spent an awful lot of his life in prison.
Yes.
Do we have enough penalties for these people? Are these two
So
brothers?
far, come on, answer the question. So far, do we? No, a couple brothers just ripped off. Yeah, so apparently the deterrent is not quite there.
Yeah. I don't mean hanging, but there's got to be something more than we don't quite understand what you did, but we'd like to hire you as our security vice president. I don't think that's a sufficient punishment.
Right. We're not there yet. And perhaps the crypto world, and to their credit, like the cloud world and like the smartphone world, will strengthen its security at least. But so far, some of these thefts have been of just staggering amounts of money. And again, because it's not backed up, it's money that is gone.
Yeah. Okay, finally, before we run out of time, I've been reading, I saw it in Business Insider and a couple other places. There's a new battle being joined between recruiters and people applying for jobs. The recruiters are implementing AI in a big way to filter out not only undesirables, but people that don't fit exactly the profile they want. And it's all done facelessly. I mean, my college students over the years have complained that they apply for a job and they never hear back. They don't even get the courtesy of, no, we're not interested. But now you're just running into an algorithm. The company doesn't even know you exist. Well, apparently, job applicants now are using AI to create their applications to defeat the AI of the HR department. It's in companies. So we have this arms race between who has the better AI at any given moment. Just thought you'd be interested in that, and our listeners, that the battle has apparently been joined, and AI hasn't. NVIDIA's going to sell even more chips, because this is a game that's not going to end easily.
Right. It's not just the AI to make the HR stuff easier. It's the AI to beat the AI that's trying to make HR stuff easier.
Yes, that's it.
Yeah. Goodness.
Okay, that's it for now, folks. You can find us on Spotify, Anchor, Google Podcasts, Apple Podcasts, and YouTube. You can see Scott on Facebook and X, and of course, almost every weeknight on NBC Bay Area, and me regularly on the BBC radio show Business Matters. Have a great weekend, and we'll see you next week. Bye-bye.